All righty, great. Let's get out of this and this. Good morning, everybody. I hope you all had a great Easter weekend and the holidays and spring break as well. Last week we didn't have Monday Mortgage Minute. We had the great idea of going out to Orlando during spring break. And honestly, it wasn't that bad. I think we prepped it pretty as much as you can when you're going to Orlando on spring break. But hope you all had a great weekend. As always, we're going to start with the news for the past couple of weeks, and then we'll talk about some other stuff um, that has come up, more so than the national news, like we always do. So first off, the Fed had their meeting a couple weeks ago, and they're still thinking of doing 3 rate cuts this year. So that hasn't changed. Their sentiment hasn't changed, even with that CPI report coming in higher a few weeks ago. They still decided to pretty much stick with their guns and still decided to do some or are still deciding to do rate cuts this year. Now we don't know when they're going to start. They just know that they still want to do 3 this year. It could be, believe the original sentiment that at least I had was probably as early as May, but could probably start around June. Existing home sales were at their highest level in over a year. Month over month, we were up 9.5% from January to February. So existing home sales are basically sales on existing construction, not new construction. So basically owner to buyer. And this could be because inventory also increased by 5.9% in January. So you're seeing, even with elevated rates, I think people have waited a little bit, I wouldn't say too long, but long enough for them to already start making a move of whatever they want to do. And you're kind of seeing it within that report. New home sales were down, but they're only down 0.3% month over month, and they're still up 5.9% year over year. So not a huge decrease at all. And actually, when we get a little bit lower into these reports, we're going to see how new home sales are going to be looking now and into the future as well. Pending home sales, which are basically signed contracts on existing homes. Basically signed contracts not sold yet, right? Just pending. They were up 1.6% in February, but they're still down about 7% year over year. We're still below the 2023 average, actually, in terms of sales. So the estimate from the MBA before the year started about having 20% more originations this year has still not come into fruition just yet. So it could be as soon as rates start to really come down and not stay flat in that, high 6, low 7 range, and they really start to come down to the low 6s, and when we can see that uptick in originations over time, possibly, and still be able to meet that number or surpass 2023. We're not too far behind. I think the index was only like less than a point away, but we still are technically less than what we were last year, which puts us at a pretty slow market to start the year. National Association of Home Builders came out with their monthly housing report, and they finally come back to that positive sentiment number. Remember that their index is from 0 to 100. Anything above 50 signals expansion. Anything below 50 is contraction. And that number came in at 51. It's the first time they're over 50, I think in like almost a year and a half. I have to go back to when the last time they were at 50. I think it was right before the Fed started to increase rates. So they have a positive sentiment about the market moving forward. Across the board, new housing increased. Last month, the exception of construction, but new permits, new housing starts, and completions were all up month over month. And remember that permits is the first thing to show for future inventory. So the fact that they were up last month, I think it was like the number was like 1.9%, so almost 2%. But year over year, they're up about 6%, if I'm not mistaken. So you're seeing new home starts really start to show. PCE came out last week, and looks like we've stalled a bit in the fight against inflation. Remember, PCE is what the Fed is looking at, specifically core PCE, which ships out food and energy. Both of them came out at 0.3% month over month. Core did fall from 2.8% down from 2.9%, so it fell 0.1%. And headline PCE went up 0.1%. to 2.5%. So headline last month was at 2.4 and went up to 2.5. Core PCE was at 2.8, 2.9 and came down to 2.8. So the reason why I think the Fed still has that strong sentiment about cutting rates is because what they're focusing on is core PCE, right? Personal consumption expenditure, which is basically the actual expenses or the actual consumption that the typical consumer will do month over month. That came down, but also they've already said that they're not going to wait for that exactly to be at 2% in order to start moving. So they're really, really close to doing it, which is why I still think it's May when they start cutting rates, but it could be possibly June if they wait another month because of the very little movement that we've seen in inflation the past 2 months. Case-Shiller's home price index, which is the reading we use a lot here, showed that in January, home prices increased by 0.4%, and they were up 6% year over year nationally. The big city winners in January were Charlotte in third place at 0.5%. Washington was in second place at 0.9%, and that's Washington, the state, not DC. And in first place came in San Diego at 1.4%. So we're still seeing these California cities increasing even monthly and year over year. I think Los Angeles was one of the main cities in December too. I was able to actually, so that's pretty much the national news for the last couple of weeks. I was able to speak with the residential president of the Miami Association of Realtors last week. She came by the office, and some positive news from her, especially for y'all that may feel a little bit worried about the new commission changes soon. A couple things to unpack, right? So first one is that NAR is currently giving away the ABR certification for free for you guys. So try to take that class ASAP. If you do not have the ABR certification, which is the Accredited Buyers Representation certification, which teaches you how to really be a proper buyer's agent, what are the proper steps and procedures to being one. NAR, not Miami Association, but NAR themselves are giving away that accreditation for free. So try to sign up. Secondly, is that most likely a buyer brokerage agreement is going to be mandatory pretty soon. And this is for anyone that is going to be representing a buyer, including a listing agent that has a buyer that comes to an open house and wants to go under contract. So why is this important? Because the buyer is going to be on the hook for commission no matter what, okay? Ultimately, it sucks for the buyer, but the listing agent is not going to want to work for less. So no matter where the buyer goes, if they start to try to look for homes by themselves, they don't want to sign a buyer brokerage agreement with you, whatever the case is, they're going to have to sign one with whoever ends up representing them at the time of sale, right? Because a listing agent is not going to want to do the buyer's work or the buyer's agent's work for free, right? I think we spoke about this a couple of weeks ago. Think about the things that the listing agent would necessarily really have to do if they were going to try to gatekeep the other amount of percentage, or take on, not gatekeep, but take on an owner that says, I saw the new law was passed, I'm not going to pay a buyer or a buyer's agent, right? Showing up and opening the door for showings, right? Showing time stuff. Imagine trying to do that for 20 different clients in 1 week, right? Because the clients are automatically going by themselves, all right? Showing up to inspection and appraisal, all that stuff. That's not going to be free work. The buyer's going to have to pay, whether that be on the seller side or the buyer coming straight out of pocket. So ultimately, it does suck for the buyer, but for you as the real estate professional, letting them know that, you know, no matter what happens, they're going to have to sign that buyer brokerage agreement. They're going to have to be, you know, responsible for something if the seller is not willing to give that up. Is kind of, at least, you know, should be able to put some ease in your mind a little bit. Third, the only thing that has really changed is that the compensation cannot be on the MLS, which we know this, but more specifically, it can be anywhere else, right? I think is the important thing to take out of this. You can put it on, if you have your website and your listings are on there, right? You can put the compensation on your website, on other sites, etc. You know, some of them are going to start, some listing agents are about to start being creative. And this is literally from the president of the Miami Association of Realtors said this, right? You can put it, as long as it's not on the MLS, you can put it anywhere else, right? NAR hasn't said anything specific as to where it can and cannot, if the seller's willing to offer compensation to the buyer's agent, where it can and cannot go as long as it's not on the MLS. Fourth, there's talks already with Fannie and Freddie to see if seller paying buyer's commission through seller credit is considered an IPC, which is what we call an interested party contribution, which basically the 6% that you get on FHA cap for seller credits and the 3% that you get on conventional if you're doing a low down payment, right? That's considered an interested party contribution, which means that the buyer can only get that certain percentage from anybody that is part of the transaction and has an interest in it. So whether that be from title credits, lender credits, seller credits, agent credits, the amount of credits that a buyer can get on any single transaction from all parties would be 3% conventional and 6% FHA. So NAR and the MBA are both looking into seeing if paying the buyer's agent through seller contribution is considered an IPC, because it technically isn't going to the buyer, but it is a buyer cost. So it's kind of a gray line. If it is an interested party contribution, there is also talks from what I've heard that Fannie Mae and Freddie Mac are considering increasing their cap from 3% to match FHA 6-7%, okay, or up to 7%. So that's already in the works as well. If it is an IPC, are you going to mess up your buyer by getting credits for your commission and them not being able to get credits for repairs or whatever the case is? Most likely not. Now, that hasn't come through yet. It probably will within the next couple of weeks or so. I would assume that it's going to be something that's said before July, right? Because July is the cutoff time. But that's pretty much just what I've heard. Lastly, there's some insurance changes coming down from Tallahassee that lowers insurance premiums about close to 20% on average because of some of the fees and charges that were on premiums before that are now being waived, which is not, you're talking about 20% on a premium. Let's say the premium's $3,000. What is that? Like $60, right? No, that's going to be more. Yeah, it's about a fifth. So it's a huge discount for insurance premiums in general, because there was extra fees and charges that were being put into these premiums that didn't necessarily need to be there. And so those laws are changing. Also, they passed a law. I forgot what it was from the top of my head, but the basis is that the attorneys, so you guys understand why insurance premiums have come up in Florida, right? Significantly, right? Insurance adjusters basically finding this niche within the insurance laws placed in Florida, where they're going in and they're basically being the representative for a client who is putting in an insurance claim. And what happens is, in the past, right, when you try to do an insurance claim, insurance adjusters have always existed, but I think that this is more prominent now, right? When you try to do an insurance claim, most likely would represent yourself. The insurance company would try to haggle, right, pay less. But what it did was it kept it kept insurance companies doing business in Florida, but two, it also kept your insurance premiums relatively low when you were first trying to get into a property, right? Obviously, once that claim goes through, your insurance premium increases. But with the presence of insurance adjusters coming in and it being so easy to sue an insurance company, right, through the attorneys that would represent these insurance adjusters, you saw a lot of companies move out of Florida, but also insurance premiums increase over time. So there is a law basically making it not as easy to be able to sue an insurance company for a claim, which will help bring back more insurance companies into Florida and bring in more competition. And of course, with more competition, it means that we will also have lower prices coming in as well for people fighting for these insurance premiums from clients. And for the last piece of news for today, Florida Housing has given reassurance that Hometown Heroes will have another $100 million available in July. I told you guys. I told you. Every single July, they're going to have $100 million. Now it just became official directly through Florida Housing. So similar to last year, I recommend telling clients to start their pre-approvals for Hometown Heroes in May. Okay, why? Why in May? If they get their pre-approval mid-May, it gives them some time to find a property and go under contract in June to get the funds in July. We did this last year, and it worked perfectly. Listing agents were willing to do it. It does basically the day that the funds are available, you typically still need about a week after the close, only because not for anything buyer related, but because of the timeframes for disclosures and things like that. Hometown Heroes is its own specific loan program, right? You're switching the loan program. When you switch the loan program, you need to send an updated loan estimate. And after the updated loan estimate is when you can send the CD. So because of that, you technically, if you lock in on a Monday and you send the loan estimate on a Monday, you can't send the CD out until Tuesday. And that means you can't close until Friday, 3 days, right? Tuesday, Wednesday, Thursday, Friday close. So you would still need that full week to be able to close on that Friday, but it is definitely possible. We did it last year, and we saw that we got a lot of good reception from sellers and listing agents if they had to wait till that specific day that Hometown Heroes was available to be able to close on that Friday. So yeah, definitely starting in May, I would say. And of course, if you have a client that is needs a little bit of work to be done, right? They got to get to that 640 credit score or something like that. I would definitely recommend to start looking into it now, so we could try to get a rescore done, get them prepped, so that way in May is when they would get their pre-approval. If they've got to work on some things, clean some things up on their credit, maybe use their money to be able to do a rescore, to get their credit score up, stuff like that. They can start pretty much now, and then at that point be ready for that pre-approval in May or mid-May to go under contract in June, to close in July when those funds are available. Okay. Last piece of news here, it is for Realtist Week. So if you are a NAREB member, there is a gala that is happening April, second VP doesn't know the date, April 11th, for Realtist Week, the first inaugural Black Excellence Gala on Thursday, April 11th. It's at nighttime. If you don't have your ticket, you should get one. If you are part of YRD, we have tickets available for you. Reach out to me and I can tell you how you can receive them. It's based off of a competition. But the week of April 8th through the 13th, we have events all that week. You should be getting emails about Realtist Week, but definitely would like to see you guys at least one of the events, if not all three, for that week. All right. I don't know if you guys have any questions, scenarios, anything you've come across within the past week, or any input that you guys want to come in and tell the group. Nope.
Good morning, Mike.
Hey, good morning, Felicia. How you doing?
I'm good. And yourself?
I'm
So
good.
I'm still trying to get an understanding of I mean, maybe people already answered it already. Just an understanding how it would work with the buyer with them paying the commission. Like, how do you get them to pay the 3%? I don't know. Like, is it only 3%, or they can pay 2%, 1%? I don't know. Is it like a window for them to change the percentage or so? Like, how does that work? Because I haven't worked on that side yet to know yet, since the change has happened. So I'm
Yeah,
not too sure how that goes.
great question, and I'll tell you pretty much exactly what, to my knowledge, what I think is the way that it's going to be working moving forward. The reason why this lawsuit came into play is because of the numbers, right? Saying buyer's going to get 3%, buyer's going to get 2%, buyer's going to get 1%, right? So essentially what you want to do is, say, when you're giving an example, you want to say X commission, Y commission, Z commission, where you're not giving a number, because that's where the class action lawsuit came in, where basically said, that everybody's in cahoots and they all know that they're going to get 3%, or, this specific number, right? Because the basis is that commission is always negotiable. But the way that it's going to work, from what I've seen and what I've heard, is that it will come in most of the time through seller credits. So on the MLS, you cannot put compensation you cannot say that the buyer's agent is going to get compensated. So what we're hearing is that basically on the MLS, you can put that the seller is willing to give credits, and you don't need to necessarily put what the credits are for. That's where the buyer's agent is going to pick up the phone and say, hey, I saw your listing. I have a buyer. Seller, I see here that the seller is willing to give credits. Will they be paying credits for commission, for repairs? What is what's the caveat here? And then at that point, the listing agent will explain, I spoke to the seller. Seller will be, if you bring in a buyer comes in at full price, we're going to be able to give up to X. And then you say, well, my service is worth X amount, and my client is well qualified and they're willing to, close right away. And on top of that, we'll be able to, get this thing done in 20 days. And your listing has been up for, 60 days already. So if you want us to come under contract, right, my price point is X amount, right? And then that's where you start negotiating it. Because it's really going to depend on your buyer brokerage agreement from the beginning. Because if your buyer brokerage agreement tells the buyer, hey, buyer, my service is worth X amount, right? But then you go to the seller and the seller's agent, and the seller says, or the listing agent says, hey, the seller's only going to give this amount. Now your buyer is going to have to cover the rest. So now at that point, you have to negotiate for your buyer so that they're not on the hook, or you have to come to the terms that you're going to readjust the buyer brokerage agreement and waive the overage of whatever the buyer would have to pay at that point, right? So that's pretty much how it's going to work. It's just going to be based off of negotiation tactics ultimately, and figuring out what your worth is per deal and what you expect to get paid from the seller for that. Narlene, you raise your hand first, and then we'll go to
Thank you so much, Mike.
no problem.
Well, I think we're looking at it wrong, if I may say. Maybe I'm missing something, but on the listing agreement, the listing agent is the one who makes the price, and decides how much they're going to pay the buyer's agent. So basically, our negotiation should be with that listing agent, not necessarily with the seller, because the seller doesn't pay us. It's the listing agent that pays us.
Not anymore.
So even
Right. That was the past.
So you're saying that's going to change?
Yeah. So that's the
Okay.
that's the whole basis of the class action lawsuit, right? Is it was the seller's responsibility to, and the listing or the agents were forcing, right, the seller to pay both sides. Basically, now it's just the option. So now when you're doing your listing appointment, right, you may say my services are worth X, right? However, we're going to need a buyer's agent, or we're going to need a buyer to come to be able to properly market this and things like that. Are you willing to give an extra percentage if the buyer's agent comes, or if the buyer comes with the buyer's agent to the buyer's agent? Usually, they may be asking for anywhere between X and Y%, right? And so at that point, during your listing agreement, yeah, you're having a conversation with the seller, basically telling them, hey, be ready because you might have to pay a buyer's agent commission. Are you willing to do this? That way I can know when I'm having this conversation with the buyer's agent when they give me a call. Obviously, you can't promote it on the listing. Then at that point, the seller will say, yeah, if I get, my full price, right, this is my bottom line that I want. Right? When you're doing your listing appointment, you want to know what the seller's bottom line is that they need. So if I get this, I'm be willing to pay the buyer's agent the commission that they asked for. But yeah, it's no longer going to be right where before you would say, okay, as a listing agent, we're going to do 6%. I'm going to do 4 and I'm going to give 2, right? That was the problem, is that it was pretty much required, to say the least. But now, because of the changes, right, if the listing agent is getting a certain amount, right, they can do one of two things. They can put it within their listing agreement already put to the side for the buyer's agent and then just not promote it on the MLS, or just do their services and then have the buyer's agent negotiate for the rest, right? Could be one or the other.
Hey, Mike, I had a question.
Yeah.
Would it be possible to also charge your client, which would happen to be the buyer, a fee and then also try to get like compensation from like the seller's side?
Absolutely.
Like, let's say you don't want to charge your buyer like an astronomical amount, and you kind of want to help them out. Would that be like ethical? Like, could we do that?
Yeah, so you could set your own price for what you want to get compensated for, right? As long as it's a conversation with the broker up front, because the broker may say, no, this is the way that we do it at the brokerage, right? So that would be first off a conversation with Tanisha. And then at that point, you can technically charge, what you feel is right for your clients, right? And when this first came out, I said pretty much a similar thing to you. Is if I was in that position, I would put something that's going to be the baseline for my client that they're going to be responsible for if for whatever reason I cannot get one penny from the seller, right? Where it's going to be a baseline for them. And then the rest will be I will negotiate it directly with the seller if I needed to. And if the seller covers what my fees are, then the buyer will have to pay it. So you can do that. But it is going to be dependent because you're doing that buyer brokerage agreement on more or less what the broker says up front is the minimum and the maximum and the traditional what you should do. But you can negotiate from there if you need to, right?
Okay, good. That makes sense. Thank you.
No problem. Any other questions? Any other scenarios?
One more thing, Mike, I'm so sorry.
No, no,
Just to
no.
go back to the buyer brokerage agreement. So you did say that for the percentage that is like if we negotiate something with our buyer and we put that particular percentage on there and then we go to the seller and the seller is not willing to offer that. But you said it is like we're able to make an edit to the buyer brokerage agreement, or we have to lock in with that particular number that we agreed with the buyer.
So that's typically that's going to be up to you at that point, right? So let's say we're going to do numbers here, just for the sake of it, even though I was told you technically can't, whatever. It's my money mortgage minute, not theirs. So let's say your buyer brokerage agreement is at 3% to the buyer, right? Hey, my services for what I do, what I'm going to do for you is I'm going to make sure that that we're going to get you showings on time within your schedule, make sure that we get you the perfect house. But not only that, my responsibility is under contract, right? Talking about the inspection, how important that is, the appraisal, negotiating the appraisal, right? If let's say, in your spiel on the brokerage agreements, I'm it's 3%, but what happens if you don't use me, a professional, and you go and you try to go directly to the listing agent who's going to most likely have, the seller's benefit up front, right? Jennifer mentioned last year, we have a due diligence, or last week, we have a due diligence to, to be able to work both sides. Absolutely. But if that appraisal comes in low, right, and the seller says, I'm not willing to budge, all the listing agent's going to do is say, hey, it's not willing to budge, right? And then it's up to the buyer with no representation to figure out if they want to come up above that, or figure out if there is a way for them to be able to back out that contract. Well, if that appraisal comes in low, you have a buyer's agent that's going to negotiate that for you. At 3% is not going to be that bad if it's going to save you paying $15,000-$20,000 over appraised value. Right. So it's just basically giving your value to the buyer's agent. And then you say, that's why I charge 3%. However, the first step is going to be trying to get it from the seller. The seller is the one that makes the most money from the transaction. They're the ones that typically have that baked into their profit, all of this stuff. Now you go to the seller on a property that your client really likes, and the seller says, I'm only giving 2%. Right. So one of two things will happen. The buyer has to pay for your 1% for your services in order to cover your 3%, right? Pay the difference. Or you basically say, hey, seller's only giving me 2%. Listen, I love you like family. Just make sure that you recommend somebody else to me. Especially if you like the way that I've worked with you so far, I'm going to lower this buyer brokerage agreement down to 2% for you so that way you don't have to come out of pocket with anything. Because I know that, maybe you're already tight on cash to close and things like that. Okay, all right, perfect. So now you basically did go down, negotiate your commission down to 2%, which is what the seller was willing to give to you. Or you could have just told the client, hey, you know, my fee is 3%. We've been looking for 6 months. You owe me gas money. It's gotta be 3%. You're gonna, you know, pay that extra 1% at closing, you know, whatever it is that you decide.
Thank you so much, Mike. That really clears it up.
No problem.
Hi, Mike.
Hey, Yolanda, how are you?
I'm good. How are you? I don't
Good,
know,
good.
maybe I'm being like too analytical, but technically and in all actuality, when a seller sells a home, they're not fronting any money. The commission is coming from the proceeds of the buyer, right? So
Yeah, they're basically giving it out of their proceeds. So it's not right. They're not fronting it or anything like that. Yeah, that is correct. The only thing is that, to be honest with you, from with the class action lawsuit, it was more so like, from what I've heard and from the trial, none of those sellers had an issue with any of their clients or with any of their realtors at all. Like, there was no bad blood with the realtors. Problem is that the attorneys are the ones that kind of got together and went to those sellers and said, hey, you can make some money off of this class action lawsuit if you join us in it. You know, and when people see that they can get some money, you know, they're going to jump on the opportunity. There wasn't anything like astronomically wrong with what was happening before, right? But it found out that, you know, it did kind of violate some sort of antitrust laws, or not some sort of, the antitrust law that we have. And because of that, you know, now is where it's going to be the same thing. It's just negotiating outside of the MLS is going to be the only difference. So yeah, I agree. I think that the sellers are still going to be willing to pay, but now it's not that set percentage, right? Because that's another thing that realtors would say, you know what, I'm not even going to show this house to this client because they're only giving 1% commission, right? And that's also where you're not doing your client any, there's no due diligence to your client at that point too. So on the flip side, as the buyer's agent, that's the other thing too that was happening. But yes, the seller's going to be the one that makes the most money off of it, and most of the time, I would still say, even moving forward, 95% of the time, 99% of the time, they're going to be paying the buyer's agent's commission at closing. It's just going to be negotiated outside of the MLS, and now it's going to be more clear cut upfront to the buyer and the buyer's agent, you know, what they're going to be negotiating.
okay, thank you.
No problem. Hey, Kenny, you're unmuted. Did you have a question? No? All right. Any other questions? Kenny went back to go mute himself. All righty. If not, guys, thank you so much for joining us. We'll be back next week. The only reason why I was off last week was because of because I was out of town technically. But next Monday we'll be back. I'm going to be putting, I haven't forgotten that we're going to be doing a live Monday Mortgage Minute, but I'm going to do that with a presentation. So I just got to put the presentation together, find a spot for us to meet at, and we'll be doing it probably sometime this quarter. So either April, May, or June, we will have an in-person Monday Mortgage Minute. I'll give you guys plenty of time. I'll have, you know, food there, and we'll do a presentation probably about, you know, something that's going to benefit you guys, not just the typical news that we do, maybe, you know, how to set up your CRM, and we'll start a CRM from the ground up, from zero, you know, how to follow up with clients properly, things like that are going to help benefit you and your business, right? Pre-foreclosure conversations and stuff like that. So we'll have something this quarter for sure for you all, and we'll be doing it in person. But thank you all for joining. I'll see you all next week. Have a good and productive week.
Thank you, Mike. Mike, I'm gonna give you a call right after you're done.
Yeah.
Thank you.
Good call.
Thank
No
you.
problem.
Thank you.
Thank you.